Hi, good day. Thank you everyone for joining us here today. We're excited to present to you today's special workshop on how to select an ERP for manufacturing. I'm Victoria Chavez, a senior advisory services consultant here at TEC. TEC is a global impartial software advisory firm that specializes in software selection and digital transformation. Today's workshop is brought to you by co-founder and CTO Mehdi Aftahi, with a very special thanks to technowebinars.com for their partnership and their continuous support in making workshops and webinars like today's happen. Just before we get started, a little bit of housekeeping. We would like to let you know there is a question period at the end. I'm sure you'll have lots of questions. We simply ask that you raise your hands and we will open your mic and get to you in an orderly fashion. Another interesting piece is for you to know is that you can zoom in at any time that you'd like to see the content. If it's not big enough on your screen, please feel free to do so. We hope that you enjoyed today's presentation and the discussion. I know Mehdi always has a lot of valuable information to share. So thank you very much for joining us today, and we'll go ahead and get started. Mehdi?
Thank you very much, and thank you very much, everybody, for joining me today in the first workshop of the series on how to select ERP enterprise or select an enterprise software. Today, we will focus on how to select an ERP for manufacturing. However, before we start, I just want to thank you, thank TechnoWebinar for giving us this opportunity to reach out to you guys. And it's also important to say that there is no specific absolute best ERP in the market or one size fit all kind of within the ERP systems. And the best ERP for a particular company is the one that helps you run your business processes most efficiently. And it depends entirely upon the specific business requirements. So in other words, the best fit ERP system for a particular company is the one that provides the features and the functionality sets that best address your unique business requirement. Even two similar companies operating in the same verticals will have different business requirements due to the different operating environments and conditions. So for these two, there could be totally different systems that is the best for their needs. For this reason, it is integral that a company that makes an effort to select an ERP goes through a methodological, structured approach in terms of evaluation and selection of the application. And today, in this workshop, I'll try to give you some basic knowledge or basic guidelines in terms of how you can go through that methodology and show you a little bit in TEC Advisor, which is the technology that our company runs on, which captures all the information and how to structure the ERP selection process for your organization. Now, the first thing that any company that goes through a selection faces are the challenges that, based on our experience, they go in a circle. So that's why I put this as three different challenges that companies face: technological challenges, internal challenges, and project challenges. And if you're not addressing these challenges properly, they basically feed into each other and the project goes out of hand. So some of the technological challenges that usually people in the selection of an ERP system tackle first, they go right away to the vendors. They look at their, the documentation or the messages that they find on the market from them, and they start to be confused on what are the marketing rhetorics, what are the facts, what they deliver versus what they promise as they get involved with the salespeople right away from the get-go. There are concerns about software and hardware compatibilities, and different technologies also boggles their mind in terms of security, cloud versus on-premise, and anything else that goes in that realm, BI, reporting, all the different technologies that can be used. But they may actually clutter their vision by getting into too early in these kind of technological challenges. And they're also very concerned about the proper implementation of the business processes within the organization without having a clear understanding of what those needs are. Then once you go over that technological challenge, and some companies, they go through it, they come out of the other end, they get into the internal challenges, which is having limited resources or lack of resources and lack of evaluation and selection expertise in-house leads to problems in consensus building among different stakeholders. And the communication gaps grows internally and also with the suppliers. So you're talking about your business requirements and needs. The vendors talk about functionality and the way that they try to sell their products to you. So in terms of if you even pass this stage and make sure that you understand the technology and internal challenges, then you get into the fact that once the project starts, you have you will understand that now you're embarking on a project where there is not enough requirements, the scope is not clear, and you have probably no way to measure the success of the project, which is all caused by insufficient planning. And that causes changing of the requirements or late discovery of the requirements within the project. So which leads into this, again, going back to the vendors, understanding what the new challenges or the new processes are, building consensus, and going back in a circle, just it feeds into each other. So what are the ways in which you can actually circumvent that and make sure that your process starts on a good footing and your project starts properly? The key steps in eliminating the risks for us is through project planning and proper project planning, which means that you have to start with proper requirements gathering and clearly identify the scope of the project and define the success factors, what you consider as successful implementation, and only when you think that you have captured all the requirements, you have to freeze the scope and say, okay, this is what we're going to do for this phase or this project, and freeze the scope right from the get-go. So these are the key steps within the planning. Most companies fail to identify the requirements from the get-go, and that leads into not clarifying the scope and the success factors. So it's very key component here is to properly identifying and capturing all the requirements. Now, once you pass that scope definition, and during the whole process, you still have to look at change management, and you have to consider building the consensus among stakeholders. And because you're not talking about technology, you're not talking with the vendors yet, you're talking about business requirements, needs, and what each of the stakeholders want. Uh, Building that consensus is much easier. And you also have to take advantage of experienced consultants, which have been working in this area in terms of understanding the market, understanding the requirements and business needs of your organization. And very key aspect of this change management is plan your internal resources properly in terms of where they're going to be contributing to the ERP project. And if the key personnel that are running your business are going to be tied up with the ERP project, you have to find replacement for them to do their day-to-day work and day-to-day tasks. So basically find proper resources to fill or backfill the gaps that are created by key users going into your ERP project. Once all of these are done, you can start your ERP evaluation or software selection process, which is collecting technical information from as much as possible from independent sources. Now, independent sources, there are lots of different examples where the independent sources are out there today in the market. So you can actually getting some information from the vendors or resellers, but you can verify those with the independent sources that you can find. TEC is one of the examples. Some other companies offer those kind of services. So you also have to understand what is being offered to you, and more importantly, what is not being offered. So in many cases, people are focused on the bells and whistles and the nice features, and they completely forget about, or the vendors actually hide the fact that some of the key requirements that you may have may not be delivered out of the box because either the software is not proper for your organization, or it's too difficult to implement, or there are some requirements or modification or customization is needed for that to happen. So typically, those are the stuff that you have to be very aware of, and make sure that the technology decisions are part of your planning process, which is whether you're going to go to the cloud, all your security and compliance requirements are captured, and the vendors are very well aware of those requirements. And one of the key items in an evaluation process is you have to not give in into the demands for customization and implement out-of-the-box features as much as possible. Now, this is the only way that we know that you can control the risks within your project and find the best fit application for your business. Now, when I'm talking about the planning and the entire process, we believe that in any major selection process, there should be, I mean, it's not always the case, but based on our experience, there should be 4 distinct phases in your overall process. The first phase, which is probably one of the most important phases, and most of the failures can be attributed, any ERP failures can be attributed to the first phase, which is planning and improper planning. So planning technical assessments of the applications, and then get into the qualitative assessments of the applications, and the fourth phase, which is negotiation, which is also very critical in terms of selecting and having a contract in place that allows you to deliver the project, deliver the application to your users. Now, the planning phase consists of mapping out all of the business strategies, business processes, and your current application landscape. So basically, you want to map out every application you have with the business processes and lay over these things together to understand what processes currently are happening under which application. This is very critical because this gives you what applications are going to be retiring, which applications are going to be integrating into your new ERP system, and also allows you to understand, once you're implementing your ERP system, where the historical data and where the operational information and data is located today. So that's how you can actually take that information and bring it into your new system. So it's very critical for you to start understanding your current architecture and business processes. At the same time, once you lay that map, you need to define your target architecture, where your new system is going to start and where your new system is going to end. So basically capturing the scope or functional scope of your new system, which allows you to build an IT master plan or enterprise master plan in this case. Now, the outcome of this planning phase is a project scope. As we were talking before, one of the key elements in a successful implementation of ERP is to understanding the scope and fixing the scope from the first step of the way. Now, once you define the scope, you can get into technical assessment. So we see a lot of companies that they start by contacting vendors and say, oh, we need an ERP system, and they start demoing right away the applications without even understanding where their needs are, where the project scope is. So it's very critical. Again, I cannot emphasize enough on the planning side. So now that we have the scope of the project, I can get into a technical assessment of the various applications, or more clearly understanding the functions and features that we need to enable that scope of the applications. So that includes your requirements with the current processes, any wish list, or defining the priorities for each of these processes. So in any organization, not all the business processes are equally contributing to the overall decisions. There are some critical processes, and there are some less critical or less important processes that can be treated differently. Now, once you know all of your processes, you can convert those into functional and technical requirements list, which is, in a way, it's a way to communicate with the vendors. So you have your business processes, which is defined in your scope, but you need to convert those into functional and technical requirements list, where the vendors can really reply by saying, yes, I can do that, no, I cannot do that, or I do not support this feature, like that, which allows you to evaluate the vendors based on a unique set of functional requirement sets, which is what we call it the FRS. So the functional requirement set is the basis for your comparison, which this gives you, after that comparison, you can actually look at the potential shortlist of your solutions, or the shortlist of the potential solutions, sorry. So now in this phase, you can go from, for example, 10 to 15 vendors or products down to 3 or 4 vendors, which clearly can satisfy your functional and technical requirements, which is drawn from your business processes. So the outcome of your technical assessment is a shortlist. It's by far, we are over from selecting the vendors. So if you just go based on the actual technical data from the vendors or the independent sources, you will not be able to successfully select your software. Then we get into a qualitative assessment phase, which is you need to identify or evaluate the vendors and implementers companies' profiles in terms of their financial profile, in terms of the product strategies and product roadmap, and the revenue. Is it matching your revenue, or your revenue matches their target market, or where they are very strong in the market? That's the initial step, what we call it the market data. Then you get into very sophisticated, or should be sophisticated, scripted demos for qualitative assessment of your solution, of the solutions. Now, that process is drawn again based on your key processes within your organization, which is probably you've discovered in the first phase, which is the planning, combined with some of the functionality as scorecards that you have basically evaluated or created in the second phase of the technical assessment. Now you're looking at, for any of these processes, when you provide the demo, scripted demos to the vendors, you're asking them to demonstrate that process within their applications. And your key users, the future users of the application, should be participating in the evaluation or qualitative assessment of the applications. And these are typically sessions where you actually have 15, 20 people of your key users going through exactly the same demo scenarios with multiple vendors, and they can then compare how good or bad vendors can supply those processes. Now, of course, part of that qualitative assessment is reference checks and other cost considerations that you can actually add to the mix for your qualitative assessment. And this completes your due diligence in terms of service providers and software vendors. Now, one of the key elements that I would iterate for everybody to also take into account is that we recommend that you go through the selection process with the requirements that the vendor and the implementer should be selected in the same process. So typically in our evaluation process, the system integrators or the resellers that are eventually going to implement the application for your organization are the ones that have to demo the software for you as well. So this allows you to make sure that they understand your business, they understand your industry, and they have the knowledge of the best practices within your industry. So that way, now not only you're evaluating the software, you're also evaluating the team that eventually is going to work with you to implement the software. And that leads to the last phase, which is probably one of again one of the most important phases within the within this process, which basically is the negotiation. And the negotiation is sometimes two, sometimes three parts to it. So one is the terms and conditions and the contract with respect to the vendor and the software licenses and what the vendor is actually promising you in terms of the SLAs and everything else. The second piece is the implementation contract, which needs to identify the scope of the implementation project from a system integrator's point of view. And you need to really carefully negotiate or understand at least what you're getting yourself into, and make sure that everything that is written in that contract, you're okay with it. And if you don't understand some of the intricacies of the language that is in there, because vendors or system integrators are really perfected the language there to protect themselves on eventuality of any problems down the road, you need to consult advisors or consultants that are experienced with that process. And the last, but probably the most important component in the negotiation is the price negotiations with both vendors and the system integrators, which has to be done in a way that locks down the price, and also the contract should protect you from paying more than what you have to, and making sure that your project is on the way properly, which leads into the signing of the contract and starting the implementation process. Now, as I mentioned before, some of the items that you need to take into account in the first phase is what are the functional scope of the application. So these are the questions that you have to ask yourself in order to, properly identifying the scope of the project. What are the legacy systems that you're going to retire, and what are the ones, who are the ones, or what applications are the ones that are going to be part of the new architecture going forward, which needs integration with the new system? And how are you going to cover the process gaps, if there are any, with each of the vendors? Now, ideally, we want to select a vendor that has no gaps, or at least on the critical processes within your organization, there shouldn't be any gaps. So the whole evaluation and selection process is to guarantee that there are no critical functionality that are left outside of the main system. Now, in some cases, there are some niche functionality that can be supported by different applications that are meant for that, but that is where you have to, at the beginning, understand that, okay, this niche functionality I'm not going to cover within my ERP, and I'm going to have it on a different application on the side, and I'm going to integrate it within the system. And the cost considerations are very important as well, in terms of typically you can determine the cost of licenses right up front. You negotiate a good deal with the vendor. You get volume discounts, and end of the year, end of the quarter discounts from the vendors. And typically those prices are not going to change unless you change the number of users or change your scope. However, the implementation costs are really are the ones that are, in many cases, problem for success of the projects. And it comes with a fact that if the scope is not very clearly defined at the beginning, you may end up in vendors asking for increase of the mandate and creating new work for themselves, and to cost that will cost you more money to go through the implementation process, which leads into scope creep, and the rest is it becomes a bleeding kind of project where depending on how severe those scope changes are, you may risk the entire project. And of course, you also have to put some realistic timelines on the project. We often see that in many organizations, they come up with arbitrary timeline deadlines for the project, that I have to have it by the end of July, and where you are in middle of June. And definitely it's not a possibility for any project to be finished in a month or so. So you need to have realistic and the proper timelines defined, deadlines defined, and also, if it's possible, you need to figure out how you're going to face the implementation process. Is it going to be a big bang? Is it going to be a phased approach where you're going to go with financials first, or manufacturing first, or different combinations? Which in this process, you have to consider your internal resources, your internal timelines, and the vendors and the implementers can actually help in that respect, because their experience usually is the guideline in terms of what makes the most sense, and make sure that the application is up and running in a proper timeline. Now, in many cases, the ROI, or return on investment, is an exercise that has to be done at the beginning to prove to the management where the improvements are coming, and whether it's even worth to go through that process with the gains that you're going to get, or it's not worth the money to spend. So that being said, within a manufacturing industry, we can look at the functionality of the applications in 3 different buckets, where you need to actually focus your efforts in 3 different with 3 different priorities. So the first piece, which is the back office, which is very common between any organization. So these are the finance, the human resources, sales management, customer care, technology, and workflow management. There might be many more, like document management and things that, depending on your industry, depending on your discipline within your organization, you may or may not need. So these are back office processes that more or less any ERP application should be able to support. The second pile, or the second silo, is the core functionality. What we call, for any industry, you need to have those core functionalities covered. So for manufacturing, of course, manufacturing and production management is one of the critical functionalities. Inventory management, purchasing, supplier management, quality management, warehouse management, and some other functionality within manufacturing and production, which is, for example, shop floor control, or product configurator, or things like that, that are becoming, depending on the type of business or type of manufacturing that you have, you may want to put more emphasis on. So we had some clients that configurator excuse me, configurator or product configurator is the key to their production, because every piece of the order that comes in, it has to be configured at the order management piece, and when you take the orders. And then there are the niche or complementary functionality. That's the third silo that we can configure the we can categorize the functionality in. So depending, again, based on your specific manufacturing discipline that you're in, you may have a great need for maintenance management, which most manufacturing organizations have. Health and safety, depending, again, whether you are in oil and gas or utilities or a simple manufacturer. Health and safety has different meanings and different disciplines and different regulations that you have to obey by. Also, design and engineering, product lifecycle management. These are, for example, if you are in an ETO kind of manufacturing, then design and engineering can actually be moved to the centerpiece, which is the core functionality. And if you are for example, airplane or aerospace manufacturer, product lifecycle management becomes an important piece of functionality for you. Then you have business intelligence, document records management, and so on. Now, how are you going to prioritize each of these? Based on our experience, we recommend that you only spend 20% of your efforts on your back office functionality. 50% should be on, these are priorities, or the way that each of this functionality eventually determine the winner of the process, the winner of the evaluation. So 50% on manufacturing or the core functionality that your organizations need, and then 30% on complementary functionality, which, if you think about it, if you have, for example, from this list, you have one or two of these items, it's going to become pretty substantial in terms of affecting the overall outcome of the process, which that takes us into the statistics. For example, in a typical evaluation that we have for manufacturing environments, if we consider 3,600 criteria within an ERP functional requirements list, if you look at the actual functionality, we can find that 27% of the functionality is about the financials, manufacturing is about 24%, sales management 15%. These are the number of features that exist in any of these disciplines. Now, once you apply that list of or the priorities as I explained in the previous slide, then you can see that that 24% functionality should come up to 16% of overall evaluation process, and 3% typically goes to financials. So there is a huge gap in between what features are going to be affecting your overall decision, which has to be considered. Sorry. So we are looking at different disciplines within manufacturing. So as you can see, manufacturing, warehouse management, business intelligence, document record management could actually be considered more important criteria than some of the financials and human resources and other disciplines within the ERP. Now, how do we evaluate the responses from the vendors? So typically in our functional requirements list, we have a list of functions that we explain to vendors, and we expect the vendors to reply by their level of support. And this allows us to make the comparison between the two or the vendors in the list. So it ranges from supported, which is the feature is supported out of the box, it gets 100% of the score, and goes down to not supported, which gets 0. And there are many different disciplines in the middle. So for example, modification is 70%, which is not as bad as customization, because modification is the configurations, the GUI tailoring, and report requirements that it can be easily ported into the new features. Customization is considered changing the source code, which we penalize it by 60% and is scored at 40. So basically, what we are doing, what we are trying to say here is that anything above this line, which is supported by modification, add-on partners, integrated solutions from partners, and out of the box, is a good feature. So you may want to consider those as good features. And anything below, which is third-party solutions and customizations, are not good. So if there are some of your critical functionality that falls into this 6, 7, 8, 9, that means that that vendor is going to have some problems, addressing your requirements. So what I mean by this is that if we look at discrete manufacturing ERP, we have these modules within the ERP: financials, human resources, manufacturing management, inventory management, purchasing, quality, sales, and technology. Again, depending on the disciplines within the manufacturing, you may have process manufacturing, you may have this ETO or engineering to order disciplines, and the requirements may vary. But if I say that, okay, from this level, you have these 4 modules that are mostly very important for your organization, that may translate into these kind of priorities, percentages per item. So in this case, you have the most from manufacturing, inventory, and purchasing, and quality management. Now, each one of these break down into different disciplines. So for example, underneath manufacturing, you have product costing, shop floor control, field service and repair, product planning, production planning, product data management, project management, and product and item configurator. Each one of these, they break down into little pieces as you go down. And I will show you a little bit of an example within our application. So on the other hand, on the core, on the back office functionality, there might be some still some modules that from a manufacturing point of view could be very important. So for example, when you look at financials, cost accounting probably is one of the features that you want to have more emphasis on, or depending on manufacturing environment you're looking at, project accounting could be a very important one. Also, from a human resources point of view, you can look at health, employee self-service, or health and safety to be very important for your organization. As I said before, it is very important to find out what is important for your organization. And as I said, again, there is no best ERP. There is only best ERP for your organization depending on your requirements. So you can imagine if I put more emphasis on benefits instead of health and safety, I can change the outcome of the process. So that being said, I'm just going to switch into a live presentation within TEC Advisor, and we'll come back to we'll come back to the presentation again. So to just show you how you can actually evaluate the vendors within the process. So within TEC Advisor, as you saw, we have the functional requirements set on the left side, and within our process, this left side list, it's going to be customized for each client. So each one of these items are going to be evaluated based on your requirements, and we can then look at if you require or if you need any of these features for your organization. So you can actually, not only by putting priorities here like no need or important or not important, you can also set them as critical, which means that you can say, okay, if a vendor do not support this feature, then I want it to be flagged for me. So I'm going to put a couple of these here and there, sorry, to just demonstrate the process. But the overall functional requirement set is what you see on the left side here, and you can actually set priorities for each of these. So, for example, if within your organization there is no need for project management, you can say there is no need. So that means that the vendors that support project management, whatever they do, it does not affect the overall decision. Or you can say, okay, it's a little bit important. So you can see that the discipline is changing here and the priorities are changing. So within financials, you have general ledger, accounts payable, fixed assets, cost accounting, and then again, from a manufacturing point of view, you may actually have cost accounting as one of the important aspects that you want to collect information about your cost, total cost of production. So, and these are different, cost centers or profit centers. So once you go through this, you can look at the overall. Let me just, I've selected a number of vendors. This is, and it's in not any particular order. I just selected some of the big names. And again, don't take this as an evaluation. As you can see that the priorities have basically changed, can be changed for your organization. So as you can see, I can look at the list and say, okay, from my list, you can see that all the way to the 9th option, which is the e-business suite from Oracle, they're all scoring above 90%. So, and even the last one, which is SAP by design, is at 81, which could actually be completely satisfactory to your organization. So anything above 90, it's excellent. It's good. So now the difference becomes in the qualitative assessment of the applications and how they do it, and if your key users actually like the way that the applications are behaving. Now, in this application, again, I can look at individually in different modules. So you can see financials, you have NetSuite now on top. If I look at manufacturing, I can see Infor.ln is on top, and Sightline number 2. And if I go to inventory, Sightline, financials, and I can do the same exercise at every level. So product costing, shop floor control, production planning, and so on and so forth. Now, if you remember, I was showing you the level of support. So this is the way that the data is captured within our application. So you can see that in here you have the level of support for each of these functional requirement sets are pointed in here. And in this case, for example, for SAP by design, and that's why they were scoring a little bit lower than the rest, is that some of the features here you can see that it's in the future release, so they don't have it yet, but it's in the works, and they're going to release it later on. So you can actually go through this list, and once you look at the overall process, you can see that how each of these vendors are doing against each other. Now, as I said, this is just the beginning of your evaluation. So let me go to the next step within the process and show you how your evaluation and selection process should eventually look into evaluation of the vendors. Now, in this model, we have this is like a secondary model that we typically create for evaluations. You can see that product functionality becomes just one portion of the overall model. So which is, you're looking at functionality, human resources, financials, human resources, manufacturing, and so on and so forth. So this section is the equivalent of what we had in here, which is the entire model it can be captured within that single product functionality piece. And then you look at product technology, which is talking about architecture, user interface, platforms, application tools, reporting. And these are very important in terms of your overall evaluation of the applications. Then we can get into, as you remember when I do within my slides, we're talking about qualitative assessment. This is where we start in terms of qualitative assessment of the vendors. And in here, we look at corporate profile, financial profile, product strategy, implementation, consulting, training services, and anything that they provide to us in terms of the information. We evaluate and we see if that is to our liking. So in terms of corporate profile, some of the questions that we ask is, what is the total amount of the worldwide sales in US dollars? So for example, if you are an organization that has like $400 million of sales, or the project tends to be like $1 million for the ERP application, you want a vendor that has the capacity to support you. And if you're going with a vendor that is a total revenue is like $10 million, with one deal, you cannot just be supporting 10% of the revenue. So that points to you that there is a problem in that space. So in another way, we look at the financial profile, if they have any lawsuits, if there are any mergers or acquisition activity, because that will derail your implementation process. In terms of the project strategy, how often they release new software and the new versions, and how good they are with listening to their customers and the roadmap of their products, how is it done. In terms of the implementation process, which is a huge section, you need to know how they're managing the implementation, whether they're doing it directly or with partners and so on. So all of these constitutes a section within our qualitative assessment, which is going to be added to the overall evaluation of the vendors. We can also look at scripted scenarios. As I mentioned before, the scripted scenarios, this section, should resemble your critical processes. So for example, in this scenario, we have production planning, purchasing management, and process manufacturing management, maintenance management. These are the main processes that we have selected for the vendors to actually demonstrate their capabilities and the processes. And typically what we do is we provide them with a script, with a start and an end of a process, and we let them show their software capabilities. And our users are going to look at these criteria and score the vendors based on 0 to 5, 0 to 3, and then the scores are going to be added at the end. Also, in the demos, we are capturing how easy it is to use the software and how their process fit or do not fit the processes within the organization and the know-how there. Last is the references, and we also look at the project plans and the implementation planning that is submitted through the RFP process. So if there is an official RFP or even if there is a proposal that is unofficial, we still need to know the methodology for implementation and the other considerations for the overall process of the implementation of the applications. And we also can look into return on investment in terms of labor optimization, operational optimizations, and so on, to see how good each of these applications are addressing some of the challenges that our organizations face with today. So all of this said, you can then look at the overall application. So again, here I have ABC because I don't want to take any sides, and as an independent application consultant. But you can also see, for example, when you look at product functionality, you're in the top 80s or 90s score. But when you look at the overall decision, the score comes down because you're penalizing the vendors based on the qualitative assessments that you did. But it's not like 73 here is bad. It's a comparison. So you're looking at the different disciplines and different vendors and comparing them to each other. And don't forget, when you get to this stage, you already passed the criticality of the functionality, which is we often eliminate the vendors that do not support your features and do not have the necessary business process support for your organization. So when you get into the qualitative assessment of your applications, here you can make sure that the applications, whichever the applications are selected, they're capable of providing you the solution. But the scores here is really representing on how good they are. We have so many cases where the number one vendor here on the functionality side becomes the worst vendor in the scripted scenario demonstrations. And that shows how important the scripted scenarios are and how you should actually prioritize them. So as you can see here, we can put the most of the discipline into scripted scenario demonstration, ease of use, and process speed. These are the three main outcome of the demo sessions. So as you can see here, you have about 42% of the decision is actually relies on the demo scripts and the demos. But something that you need to take into consideration that this demo is not anything that the vendors want to show you. It's something that we ask the vendor to show you. It's a totally different discipline in terms of managing the demos, and they're not going to be able to show you the bells and whistles and the some of the features that are very eye-catching and seems to be flashy, but rather on how the actual process or the business processes are actually working. So with all of these, we can also look at the cost consideration, and also, as I was showing you before, there is disqualified criteria. So here you can see how many criteria each one of these vendors actually failed to provide. So, for example, in this case, we are asking for the automatically determining the unrealized gain or loss due to fluctuations in the currency rate. We want that to be supported, and this vendor is supporting it via customization, which is something that you absolutely need to have, or you can basically say, oh, the vendor is so good, I can live with that. But again, the aim here is that once you get into your evaluation and selection, you know all the facts and you know what you're getting yourself into. If the vendor says that they support it, and then during the implementation they come back and say, hey, we don't have that and we have to customize it, now you know that they basically supplied you with the information. So in that case, they must be responsible for that cost, whatever it comes down the road for you. Now, the last thing I want to show in this demo is the cost consideration. So you can actually put the cost information in there, and usually we do that at the last stage. As in my 4 phases of the evaluation, the cost considerations always comes the last. You don't want to start negotiating before you even know what the scope of the project is, or what you're getting yourself into, and what being offered. So now that you know exactly what is being offered, now you can talk about cost. Now in here we can put the cost at however you want to put it in, as a on-premise, which you're going to consider hardware, software, and maintenance and implementation costs, or in terms of a cloud, you can have license and implementation only, which is typically we calculate that over a period of 5 years. In terms of on-premise, you have to include 5 years of maintenance. In terms of the cloud implementation, you can talk about 5 years of licenses plus the implementation and all the other costs associated with the implementation of that solution. Now, you can see that here we have the product A being the number 1, product B number 2, with not that much of a difference between the two, and product C is far behind, around 8 percentage point behind. If you look at the price, you can see that 800, 700, 690, and there's a $100,000 gap in between the price for 0.1 percentage point of the price. So which means that for vendor A, you have $10,906 per point, and for vendor B, you have $9,557. So if I now do the evaluation based on the best value and not based on only the absolute value, the score, you can see actually the product A that was the first vendor now is the last one. And for that fraction of a percentage point that they are above, we can offer them only $1,000 based on the value equivalency that the product B is telling us. So if I go based on product B, which is the best value we can get for our money at $700,000, then product A has to be at $701,000, because there's only 1/10 of a percentage point better than product B. And also, it's interesting that product C has to be lowering its price by almost, I would say, $60,000 to 624, and that way we are going to be saving money, and we still can go with product C. So this is the way we typically evaluate the values of different applications, and it gives us a point where you can actually start negotiating and put them all in the same value equivalency and see how things are working. Now, let me go back to my presentation to finish it off. I'm just not going to go through that. So we've been through this. So these are all, I basically explained everything that we are going to have as a discipline within the application. And then the last piece, which is the negotiations. It's very critical for you to make sure that you understand each term in the contract, make sure that you agree with all the terms in the contract, and you get your purchasing department and purchasing rules and discipline involved, and to make sure that they support the process. You don't want to start negotiating with the vendors and then your purchasing department comes back and says, no, we cannot do it like this. We have to start all over. And also ask professional advice in both the technical and legal aspects of the contracts. Your purchasing and legal departments may not have the expertise in terms of purchasing software. You know, you are in manufacturing, you know how to deal with your suppliers. You probably have seen many contracts that are exactly the same in terms of your raw material, your service providers for your manufacturing goods and services. However, software is a completely different ballgame. So you need to use professionals that are in that space and working in that space. When it comes to the price, make sure that the cost components, all of the cost components are taken into account, and avoid open-ended SOWs. As much as possible, you should try to have a fixed price deal with the implementation partners. Now, the reason that we are pushing for that is that if you do your homework right from the get-go and you have the scope defined properly from the start, and you share that scope with the vendors and with the implementation partners, then they should be able to give you a fixed price, because then they understand the scope and everything in that scope is going to cost you that much. If you go beyond that scope, it's all documented and they can actually easily prove that it's not part of the scope, and then you also can say, okay, whether you want that change or not. And the other thing is that for the vendors, you know, some of the good things that happens at the end of a quarter and the end of a year, they provide you with huge discounts because they want to meet their quotas. So consider that as make sure that you align your project so you can take advantage of those considerations. Now, as I showed you before, the scope is just like this, and you need to emphasize on you know, the qualitative assessment in the overall process much more than the functional once you pass the shortlist. So the shortlisting process really heavily relies on the functionality and the fact that the vendors that go into the next phase of your project, they should be able to support your functionality. But then once you pass that stage, you really focus on things that more qualitative and subjective to your organization, like market data, scripted scenarios, and so on and so forth. Now, recommendations, I cannot emphasize more in terms of requirements gathering. There should be a proper and thorough requirements gathering process. BPM, or business process modeling, it has to be done at a high level when you're talking about ERP selections. However, in some certain areas, we can go deeper into that business process modeling. But in general, we don't think that the BPM necessarily, as a documentation, has to be part of your selection process, and has, in some organizations, they spend months and months on a BPM process, which is probably overkill for the process. So we need to identify the business processes and build a consensus around the business processes and the new architecture. So once everybody is bought into the new architecture and the scope, then you go about your next steps. BPR, or business process reengineering, is a process where it has to be done by the vendors, and once you have the correct vendor selected. So it's very critical. Everything I said today is about the vendors and selecting the right vendor, because they can re-engineer your process properly for your business, and insist on best practice implementation and not on customization, and avoid customizations as much as possible. And last, and I don't know if I said that enough today, clearly identify or define your scope before going anywhere. Now, I am done. I think we still have 15 minutes. If you guys have any questions, Victoria, I'm ready to answer if there are any questions.
Excellent. Thank you, Mehdi, so much for your presentation. You shared a lot of valuable information with us, as always, never a surprise. At this time, we would like to open the floor to any questions. We ask that you raise your hand, and Oscar will be available to open your mic. So we'll give you a moment to get your questions together. Mehdi, one question that we had in the chat was if, of course, they're going to get a copy of the deck, but they also would like a copy of the 3,622 criteria for the ERP. My response to that is just contact us, because we can maybe help you to customize the requirements. Maybe you don't need that full scope. It's better to have a detailed discussion with us in regards to that. And you can reach us, follow us via LinkedIn, Facebook, Twitter. We encourage you to like and follow our pages. You can reach out to Mehdi directly on LinkedIn, or you can send us an email at advisoryservices at tec-centers.com. Danielle, do you see any questions over there before I continue with the questions in the chat?
No raised hands at the moment.
Okay.
So let's go to the chat. Yes, okay. Yes, one hand. Lede or Heide, sorry. I'm going to open your mic, LED. You have to unmute. LED or Ide, Lede baby.
A common problem throughout the pandemic. You're on mute.
Okay. Lede ask, how do you collect the system and vendor characteristics? Good point.
Okay. In our organization, we have, as you saw, TEC Advisor, which captures the information that we gather from the vendors. In any project, when we start the requirements and create the list of functions and features that the clients want, we pre-populate that with the vendor information that we have available in our database. And then we send that to the vendor. We say, okay, you've said to us so far that you support that feature or you do not support that feature. Can you give us an update? So basically, we send that information to the vendor, and the vendors, with a tight deadline, usually within our projects, they reply and say, okay, I used to support this feature and I still support it, or I used to support it via modification, now I support it via out of the box, or I do not support this feature as I was not supporting it in the past. So within each project that we go through, we are basically refreshing our data with all the information about the vendors participating in those in that project, and we capture that information in our database and we reuse it for the next one. So our database is constantly refreshing and with more criteria, and at the same time more recent information directly from the vendors. And don't forget, because we're going through the demos, we often know if the vendors are lying or not. At the same time, part of our process is to attach the RFI or the list of functions and features to the contract. So we are making the vendors liable for whatever they say in the RFI. So in that case, they usually tend to be very careful about what they say, and often they tell the truth because they're legally liable.
The follow-up was, then do you validate these? But I think you just made reference to that clearly.
Yeah.
Mehdi, how far down in the functional level should a company evaluate? Because you showed a pretty deep level of criteria there. Would you say that they could make a decision or a selection on just going to the second level, or would you recommend they go a bit deeper?
No, of course, you don't want to bog yourself down with too much details. The beauty about our platform or our application is that you can focus on the high levels and set your priorities at the higher levels, but the data is actually coming from the lower levels. So basically, we collect the information at the lowest levels, but you don't have to spend your time in terms of setting priorities or spending too much time in the lower level sections of the model. But it is very important to have everything included in the overall decision. So you cannot just say, for example, if the company or if the organization has shop floor control. Everybody says yes. So you need to go into a level of detail where you can actually differentiate between the different solution providers and the applications.
Thank you, Mehdi.
Victoria, you have some questions in the chat.
Yes.
You see?
As a small vendor, how can we be included on the list of available vendors?
We are equal opportunity in terms of vendors. There is no small or big vendors for us. Anybody and everybody can participate. If you are interested, share your contact. We'll get somebody to contact you and send you the forms related to your specific solution and where we can actually put your application, whether it's going to be in the manufacturing, discrete manufacturing, process manufacturing, or any other discipline. You have to define that, and then we can provide you with the information when you provide us the information about your particular solution, and we post that for you.
Thank you,
podéis
Mehdi.
plantear las preguntas en español y se las traducimos a Mehdi, ¿eh?
There's a question. In today's world, most of the companies look for specialized solutions in the market for each module, such as planning, transportation management, warehouse management, and makes use of ERP as centralized DW systems. What's your recommendation and suggestions in this context?
It is true, and you know, we go through a lot of you know, projects where companies are looking at domestic created by just going through different applications, disciplines for different modules. You know, it may seem very good at the beginning that you have a you know, a warehouse management software and an accounting software and an HR software and a maintenance software there, which are each one of them are the best within their disciplines. But if your company grows and you want to have connectivity and the data sharing between these applications, and eventually you get there, it's going to be a very big challenge in terms of making sure that these systems talk to each other properly. And we go through a lot of organizations, and they come to us for redesigning their architecture and getting rid of many of their systems and unifying the systems under the minimum number of software disciplines. So for example, of course, the ideal would be one system that does everything, but in many cases, we may end up with 2 or 3 different systems. But we also have cases where there are like 15 major systems in the organization, and managing that many systems is not very ideal for the IT people. Also, from a reporting point of view, the management is not able to get the version of the truth that they want to know, because you go to this system, it gives you a perspective, and to another system a different perspective. How do you match these two into one global perspective? It's a huge challenge. Not saying only that is the issue. There is a data duplication issues. There are data re-entry issues, because from one system you have to re-enter into the other system. For example, if you have a different maintenance system than the purchasing system, then if somebody orders a piece, they enter the order in the maintenance system that I need this piece. Then the purchasing people, they have to enter that information back into the purchasing system if it is not automatic. And in most cases, it's very hard to automate these processes between different systems. Then the data re-entry issue is there, and then you get into receiving the item, is going into inventory, then has to be re-entered. In a seamless, unified system, once the guy enters the order from the maintenance system directly, everything should follow properly within the system. There's no need to re-enter, for example, for purchasing or when you receive the order in the inventory system. So I'm not saying that everybody is doing a mistake, but you need to be really careful on where and why you need to have a separate system. And there has to be a good justification for it. And definitely keep the number of systems in place to as minimum as possible.
Thank you, Mehdi. Did you have another question, Danielle?
No more questions and no more raised hands.
Mehdi, I do have a question. What would be the best way to decipher between two vendors that appear to be very similar in terms of, they only slightly differ in price, but they seem very similar in fit? How would you what would be your recommendation to best decipher between the two? What would be the best fit?
You know, there's many different factors that you can actually take into account. Within our qualitative measures, you need to look at their experience, for example, within your industry. That could be a determining factor. The ease of use, the process fit. In terms of functionality, they may still be the same, but you know, price is always a consideration, and also the implementation services and availability of resources to support you in the long term. So all of these disciplines, if you put them all together, I doubt that everybody is going to come out the same way. Like, there has to be some differentiating factors. Now,
Sure.
at the end of all of this, they're all the same. You flip a coin. You know, there is no other way. And if they're all look the same, check all the boxes and everything else, then it means that they're the same price, the same thing, and so maybe just you don't have a way. But I doubt that if you do your work properly and if you do your the steps as we mentioned before, if you go through all of those steps properly, I doubt that there are going to be two vendors that are going to be exactly in the same spot. You know, there are going to be references, there are going to be geographical support that you need. All of these you have to drill down into finding some differentiating factors between them. Right?
Right, absolutely. Thank you so much, Mehdi. If there's no more questions, I would like to take a moment to thank Mehdi for his presentation today, Mehdi. And actually, we do have a question here. One moment, please. It says, does your solution meet the needs of organization that require public procurement processes? Does your DSS support group decision making?
Yes. And we had many public entities that we basically helped in the selection. Once it comes to the RFP process, we have a RFP management process where we work very closely with the purchasing department and the RFP department within the organizations, where we design the RFP documents, again, with the close relationship and the close working with the purchasing departments. And we have the ability to manage the entire official bidding process. And many organizations that we work with, we help them go through that process very easily. And our application, the TEC Advisor, is fully capable of capturing all that information, documenting it, and specifically speaking from a public tender point of view, you would like to have all the facts captured and documented. So this is a perfect platform for doing that.
Clear audit trail, everything.
Exactly.
Yes, I was going to say something else, but thank you so much, Mehdi, and also to you, Daniel, and technowebinars.com for all of your continued support and your partnership. We really appreciate it. You're awesome to work with. We do have in a couple weeks a workshop coming up on consultants. So like I said, just follow us on LinkedIn, like our pages on Facebook, Twitter, and we can provide you with more information. If you have any other questions and you want to reach out to us directly, again, you can do so. We will send you a copy of this recording but you can reach out to us at advisoryservices@tec-centers.com.
Goodbye from Barcelona.
Thank you so much. Have a great day.
Yeah.